This is ForexOverviews.com with the short-term analysis of dollar-yen forex pair. This is a daily chart of dollar-yen. Here we can see that the market is forming the symmetrical triangle, which also is present on the weekly time frame. And on the weekly time frame, it looks more like with the pennant pattern. And here we can see that the market is at the fifth wave of this symmetrical triangle. First, second, third, fourth, now forming the fifth wave, and usually the breakout occurs at the formation of the fifth wave or after this. So for instance, the market could break it with the fifth wave or just make the fifth wave and break it to the downside. Alright, and if the market will break it to the upside, it will be in a row with the butterfly cell that is forming on the weekly time frame. Alright, and also this breakout can lead to the formation of this upward channel. If we connect these three buttons and plot the line to the upside, at this top we can see that the market can be making this butterfly cell, the breakout of the triangle, by making some upward channel or making some further acceleration upward this. Right, but we can also get another picture here, another development. Maybe the market is making the inverted head and shoulders. The pattern itself is not quite harmonic with these buttons here, but still it's a nice head and shoulders. The head is at the 1618 extension of the left shoulder, and if the market will break the neckline here, will break this button to the downside, it can trigger the downward development, and the market can be in fact trading in this downward channel. Okay, this could be in a row with the formation of the butterfly buy that's discussed on the weekly time frame. On the next chart we can see, if we zoom in, that on the shorter term, in fact, the market is downtrending on this downward channel. All right, on the next overview we can see that the market completed this 1618 butterfly buy. Here it is in yellow, and this some sort of three drives buy. I've put this similarity symbol here because the ratios are not perfect, but here's the first drive, the second drive, and usually the three drives pattern has inside of it some butterfly. Okay, so market completed it, and this butterfly really worked. It was pierced a bit to the downside, but it worked. Now market made the upward action, and in fact this butterfly can be treated as successful completed. It has successful achieved its minimum target, which will be the 38 Fibonacci resistance of the whole butterfly move. Okay, it reached the 50%, so it's okay. The market now is technically able to continue the down move. So here's what we have on this chart. On the next chart we can see the harmonic swings, the retracements are being harmonic. If we plot this line here and we drag it and clone it to the other retracements, we can see that market is making almost the same distance in these retracements. All right, so for this we can see that by this retracement market has completed the harmonic swing and is now theoretically at the resistance. Okay, on the Fibonacci framework we can see that market is also at resistance. It's testing the K area, the confluence resistance area of Fib nodes. It's also at previous tops, so it's at strong resistance on the daily time frame, and it suggests that at least some retracement should come. We can also see here two ABCDs, the first one in red, the second one in blue, and market has left behind below the market important targets of these two ABCDs without being touched by the market by just few pips, as you can see here. The second one in blue left behind the 127 extension, and the first one in red left behind the 1618 extension. Also take a note that these two levels are on the same level of the 78 fib support of this up move here. All right, so this is the 78 fib support and targets of ABCD that have quite not been touched by the market. And in many cases, when the market left behind these targets, it usually goes for reaching these two targets before making any significant moves. So for instance, if you're bullish on the market, if you like to buy this market, you must be aware that the market could first touch these targets before making any up move, and this would also be some sort of the double bottom on the daily time frame. On the Dow Jones framework, on the next chart, we can see that we have an interesting situation because today market has opened this trading session above this red line, which is the MACD predictor, telling us that the unconfirmed trend is bullish. But if the market will close this trading session below this red line, it will make the confirmed trend stay bearish, because the price is trending below the red line until now, and market has not closed this trading session yet at the bull side of the trend. So if we will get a close below the red line, it would be the stop grabber pattern, and the minimum target of this pattern is the previous low. So for instance this one, and it could make the market clear these lows and at the same time reach the targets of these two ABCDs that are left behind the market. So it's nice and interesting situation. We must be paying attention on the close of today's trading session to see if we will get this pattern or not that will suggest the taking out of these lows by the market. Okay, by the price action framework, we can see that the market is testing the upper MA of this framework, so this adds resistance, so it tells that the market is also at resistance. Now let's take a quick look at the weekly pivot points. On the 4-hour chart, we can see that the market has passed through the weekly pivot point, the blue line, and now is testing the weekly pivot resistance 1, making a bearish engulfing candlestick pattern, suggesting that market will start some retracement. So market is at resistance here too, an important resistance for the week. On the next chart, we can see that the same level is the 100 period MA on the 4-hour time frame, right? Here we can see next that the same level is the important 98 and 30 important level of classical technical analysis resistance for the market. Then the market is downtrending inside this downward channel on the 4-hour time frame, which is the same one that we have seen on the daily time frame. So market also it is at resistance on the 4-hour time frame on intraday chart, suggesting that some retracement should come. On the Fibonacci framework, on the 4-hour chart, we can see the most important level to be looking at on the next hours or for the next few days. This zone is an important zone of support because it have the K area, the confluence support area, the confluence of fib nodes between the 97.18 and the 97.36. This zone also have the daily pivot support 1 and the daily pivot support 1 for the current day, Wednesday, and the weekly pivot point for the current week at 97.05. So the weekly pivot point is passing slightly below it, and the daily pivot support 1 for Wednesday will be passing something like here. So all of them very near, so strong area of support that can decide the direction of the market for the next trading sessions. All right, so if on the next hours market will really intend to do this retracement, if the market will reach the zone, reject it, and go to the upside, it may be signaling the breakout of this downward channel and upward continuation for dollar yen. If, for instance, the market passed below the zone with strong moves like this one, it can at minimum reach the ABCD targets that are below the market on the daily time frame, or even break it totally to the downside, triggering the head and shoulders pattern. So pay attention on the zone and how market will behave around it, if it will reject it or if it will pass below it. Of course, market cannot do any retracement at all, just continuing upward. On the hourly time frame, we will see that the same zone here is the zone of the dynamic support and resistance. That is the area between the 50 and 20 moving averages that can be used to go long on the market. So if the market will make some reversal signal here, you can use it to go long with a good risk-reward ratio if you have it. Okay, so this will be also the same zone. Also, this will be this nice area of classical technical analysis support and resistance between the 97 and 97.30 on the hourly chart. It was previous support and resistance, and if you scroll down backward the chart, you will see that many tops and bottoms goes to the zone on the hourly chart. And we can also see that this can be the upward channel that's starting on the hourly time frame. For instance, if you connect this and this point and this, okay, with this line here, and if you take this line and put on this bottom here, you will see that the zone of the 97, 97.30 can be at the bottom of this line, so adding support for an up move. Now returning back to the 4-hour chart with the displaced moving average, let's remove the 7x5, stay just with the 3x3 and 25x5. We can see that the same zone of the 97, 97.30 can be suitable for George Napoli bread and butter buy. For instance, we have a nice up thrust above the 3x3. The market can make up to 3 closes below it, reaching the zone here, okay, and it can be the bread and butter buy. That is a directional signal for the market. Also, the MACD predictor on the 4-hour chart points a very strong bullish trend, and if the market will retrace, it may find this line here, and or it will be a little above, and it can make some sort of stop grabber pattern, pushing the market higher to the upside. Okay, so as a conclusion, for the short term on dollar yen, we can say that we still don't have a clear direction on the daily time frame because we have unconfirmed patterns. We have the symmetrical triangle that hasn't been broken out. We have unconfirmed patterns on the weekly time frame also, and depending on how market will behave about this bottom or about this top here or even this one, okay, we will have the direction for the next days. For instance, if the market will break this high, okay, or maybe even this one, but mainly this one, it will open the space for the butterfly sell on the weekly time frame. And if the market will lose this bottom here, it will open the way, it will trigger the head and shoulders on the daily time frame. So for now, we don't have the clear direction. What we have is a nice zone of support on the intraday charts that we can use, the most important levels for the next hours that we can use to define the situation for the next few trading sessions. And for instance, I will be trying to go long on the zone between the, let me see here, 97.0 and 97.30, 97.40. I will try to go long on the zone at the dynamic area of support if I get a signal. If I don't get any signal here, I will just skip it and watch. But be aware that the market still has untouched targets on the daily time frame below the market, so this can lead to another down leg and another important down move on the market. That's it. Thanks for watching.